So today's video is coming from a suggestion on YouTube from Anna that we take a look at Microsoft Corporation, and I'd be happy to. So here we go. Microsoft just reported earnings not too long ago for the first 3 months of the year. And so we're coming to the 10Q document here, and I'll scroll down. They lead off with, like most companies, kind of an income statement here. Some companies lead off with a balance sheet, but we're starting with income here. So we've got a 3-month view here and a 9-month view here. So it gives you a little broader time frame here to see what's going on a little bit longer time frame. 3-month might be good in the situation we're in. We got the coronavirus and things like that affecting different kind of companies. Certainly Microsoft a little bit less than maybe like an airline company or an insurance company or something like that. So here we go. We got revenue coming in right at the top line. They got products and they got services and other. So they kind of break it down in two different ones. As we see here, business is really steady kind of year over year on the 9-month view and the 3-month view. Remember, these are in millions of dollars. So this is a very large company. This is $15 billion. This is $19 billion. Services is growing a little bit faster, or actually a lot faster than the product revenue. I'm going to guess this is their maybe cloud computing is lumped up maybe in the service. I could be wrong about that. We've got a total revenue figure growing, relatively nicely here for a company of this size and this maturity level. This is still fantastic growth. It's no surprise that the company's shares have been doing fairly well over the last few years as well. What's really impressive about this company is the cost of revenue. Look, to generate $15.8 billion of revenue, I put this in quotes, but only $3.3 billion in cost of revenue. Now, that's not the only cost. We've got other costs that we'll go through down here, but that's extremely impressive. Look, it actually went down. So revenue ticked up just a little bit, couple $100 million here, but actually the cost of that revenue actually went down. So they're driving some efficiencies and things like that there. Service revenue, we're seeing, costs actually ticking up here, but they're growing a little bit faster on the top line. So it's very nice. We get down to a total cost of revenue here around $11 billion. So they spent $11 billion to generate $35 billion. I mean, you would do that every day of the week. I don't care if you're selling candy or selling software. That is incredible rate of return on this kind of investment here. Now, so we've got a gross margin here. So this number minus this number gets us to this gross margin. We see gross margins ticking up here, even though, look, so this is ticking up a little bit. These margins are ticking up just as well. It's showing you everything's, a company like this, no surprise, has kind of reached scale. Look at this. You're seeing really fantastic gross margin growth. Even, look at how minor this jump is. We went from 32 to 33 billion, but this is a meaningful jump, 59 to 71. So that's incredible gross margin expansion there, as they might say. So research and development, again, all these are staying in line as we're seeing, gross margins expanding. These costs are staying in line. These actually went down or almost relatively flat there. So that's really phenomenal to see. We have some operating income here. They're going to pay some taxes to maybe the world and certainly the United States government as well. And we come down to a net income. This is a GAAP figure. And for most companies, I tend to like to use this as a baseline, see where they're at from a GAAP basis, GAAP, generally accepted accounting principles. And so, for the quarter, they generated $10 billion. And for the like a 3-quarter basis or 9 months, it's right in line there. You got 33 billion, which is about 10 billion a quarter. So all looking really good. I tend to not pay attention to earning per share, and I'll show you why, is because look at the denominator is actually going down. So they're performing a buyback over at Microsoft, and so the number of shares outstanding is actually getting down. You'll see it stretch as we stretch out. Not a huge buyback going on, but it's enough to kind of tweak these earnings per share a little bit. I tend to just ignore earnings per share and kind of look at this, what are they doing with the share count? Is it staying relatively the same? Are they buying back? Are they releasing more? That is more important to me than kind of like a singular earnings per share number. But, you can go with what you want. More income statement here. We're kind of look like they have some other derivatives and investments, things to handle their cash. Looks like they made maybe a little bit of money on top of that. And so that's not related to the business per se, but it is hitting the bottom line. So now we on to a balance sheet. Should be familiar with this. Any kind of business class or any business you run, you're gonna probably come across this. And so we have cash and cash equivalents, straight cash, homie, as Randy Moss would say. We got about 11 billion, but we've got these other short-term assets. What I like is they kind of lump it into this total cash number, so you can kind of get, you don't have to bust out your calculator or anything like that. So they got 137 billion dollars of cash. Don't want to shortchange Microsoft any amount here. So that's a lot of cash on the balance sheet. We've got some inventory here, got some account receivables here. This number, as I brought up, in certain businesses, so mall operators, maybe even used car lots, commercial real estate, this accounts receivable, while in the past might have been fairly consistent, now that we've got people losing their jobs, businesses going out of business, this accounts receivable might be as good as gold. But, in Microsoft, $22 billion is a lot of money. But in the grand scheme of things, you got to imagine this will still be I mean, they even show you kind of doubtful accounts in here, and it'd be interesting to see does this tick up in the future months as businesses start to close, things like that, since Microsoft does do a lot of business to business kind of stuff. But that's not here nor there. It still looks fine to me, even if this is half as much. I mean, it would materially impact the company, but it's not going to make or break whether you're going to buy shares or not, at least in the long term. Got some other stuff going on here. Gets down to a total assets of 285 billion. Not necessarily like the most important thing. We can compare it to the period before, and it's gone down just a little bit, but it's not really that big of a deal. To me, like a company like this, you're buying for that top line growth, maybe even the dividend growth, net income, and any kind of future products that they might come out with and kind of leverage the Microsoft brand and the customer base and things like that. Liabilities, some things of note here. We do have some long-term debt, and it's not insignificant. That is $63 billion. This is in millions. So yeah, we got to add some zeros to these numbers. That's a lot of cheddar. But again, they have up here $137 billion in debt, so they could wipe all this debt out pretty quickly. They have long-term income taxes. I bet the United States government wouldn't mind getting a check for $28 billion from Microsoft. I don't know the timetable they've got to pay this. I'm assuming this is a liability that they have to pay at some point, maybe not all at once, but that is what they're recognizing here. We got some other stuff going on here, but liabilities of 170. So they actually ticked down from a year ago period. So that's not bad at all. Now we've got total shareholder equity here. It's positive. You look at some of these really bad companies, it might end up being negative. So now what they're doing here is on this cash flow statements, they're showing you, hey, here's how much net income we made. They're going to make some adjustments. So this depreciation number is not really a cash number. This stock-based compensation is not necessarily cash. They're deferring some income taxes. That actually gets added back into there. You got accounts receivables, inventory. This is all this is not like cash money like with precedents on them. This is like other stuff. So they're showing you net cash from operations down here is actually 17 billion, which is, more than 10 billion. But, you can sometimes analyze a company this big, not necessarily going to get deep into the weeds here, but maybe for some smaller companies where they're not really generating a ton of net income, but they're doing a lot of investment in these spaces down here, it might make sense to kind of adjust for that kind of number. Got financing, they're repaying debt here. They're common stock issued, so that's how much was issued, so money kind of coming into the company. And common stock repurchase. So here's their buyback, so you can kind of see the pace that Microsoft is buying back shares. That is supporting the stock in some ways. That's supporting EPS. It's supporting kind of earnings growth, at least from an earnings per share perspective. That's why I don't typically look at that EPS number with a really heavy hand. Common stock and dividends paid. So this is money coming to shareholders and investors and things like that. And so, in some ways you can look at this as a really good expense, especially if you own shares of Microsoft. Moving on, some investing here. This is like just them moving around cash, essentially, not super important, at least from Microsoft's perspective in terms of running their business. And then we've got cash and cash equivalents at the period, this 3-month period that we're looking here in the 9-month period here. Some stockholder equity here. You can dig through here if you want. Nothing super important here. And quite frankly, that about wraps it up. So I want to make these quick. And the reason why I'm doing these is I want to show you every month, if you own Microsoft stock, you should be going through these statements exactly how he does. You don't have to read this whole document. This is a very long document, but at least go through these top line financials. And this is for every stock that you own. If you're not doing this, honestly, I would stick to mutual funds, ETFs, more broad-based passive investments. If you're actively investing in Microsoft, you should be actively going through these numbers exactly how I did them. And that's exactly why I walk through the numbers, to kind of teach you the process, at least from a surface level, that you should be walking through these numbers. A company like Microsoft is outstanding. I certainly wish I owned shares, and maybe I'll buy some in the future. But for now, I'm